Hi everyone, hope you're all doing well, and today we're going to talk about the new stock that I started buying, which I believe this stock has the potential to 2x in the next 2 years. And this stock is one that I started buying on Monday. It has gone up a little bit since I did start buying it on Monday, but I was posting on the Patients group about buying this company. So if you do want to buy companies when I'm buying them and selling them, there's a link in the description that takes you to my Patients group, and I always post what I'm buying and selling on there. There's also some portfolio reviews that we do on there as well, some great content that's exclusive on Patreon. But yeah, this company is called Callaway Golf, ticker symbol ELY. Now, I've started buying this company and I believe that it has the potential to be a $60 stock by the end of 2022. I am trying to hold off a little bit and buy it below $20, or if it can, maybe $22. But on Monday, it was quite a good day really, because the stock actually took about a 4% dip, and that's when I started opening up my position. So I've only just started buying it. I am hoping for a lot more dips. I've currently only bought about 20% of the position that I want to buy in this one. So I'm kind of like doing my crash stance and hoping that the stock market has a pullback and I can buy more of it. But yeah, this company had fantastic earnings, but realistically, this is a company I've tracked for a very long time, probably about 3 or 4 years. And the valuation has never got to the right point, even though I've liked it. But there's one big fundamental change that has happened with this company over the last 2 months, and that is that it's buying Topgolf. And this is the thing that has now pushed me over the edge to go buy it, even though it's still at a pretty decent valuation for a golf company. But now, because of the acquisition of Topgolf, that was the thing that I'm really buying into this company for. And when this deal is done for Topgolf, I think it could be a major catalyst that will send it up to a $60 stock in the next 2 years. So the big thing as well with this deal is that I don't believe the deal is priced incorrectly to into the Callaway share price. Because of the acquisition, the share price should be a lot higher. So we'll be taking a look at that. And like I say, buying under $20 is where I'm looking. If it is under $22, that's not too bad. But anyway, we'll look through the Callaway company first, because obviously that's still a very good company, and then we'll look into the Topgolf side of it, because I think that's like the little the topping on the cake, if you would say. So yeah, I think that's the really big thing that has pushed me over the line. So we'll take a look. So just starting on the company from a fundamental point of view, 2.3 billion market cap, which is a massive company, but we are talking about Callaway Golf, which is the number one player in its area, and it sells golf clubs, golf balls, clothing, and other gear as well. So yeah, it's quite diverse in the golfing kind of industry. When we look at the stock price, you can see that I wish I was buying at this March time. That was crazy cheap. But on a historic point of view, like, the company's kind of just broke to new 52-week highs. So like I said, I don't like buying at 52-week highs. This is why I'm kind of like hoping for a little bit of a pullback. But yeah, hopefully we do get one. But yeah, the stock has done a decent recovery. It had a little bit of dip when it announced the Topgolf. I think that was just because the amount of debt that it was taking on, and people were like a bit unsure on it. But when I saw it, I was like, I've been tracking Topgolf because I was hoping they were going to IPO. So that's the main reason why I clocked it. I was like, oh, that's actually a really good purchase. But anyway, we'll get onto that a little bit later. And then we look on the previous revenue and profit. So the company has been in and out of a lot of profitability, but it has been expanding a lot. So I can kind of, be okay with that. But the revenue is moving in the right direction, which is the really key thing. The revenue has historically grown, about a 10% rate every year, which is really good. Obviously, it has a little bit of a dip in COVID, but nevertheless, the actual Q3 numbers that we'll get onto in a little bit were actually really good from the company. So it seems like a lot more people are actually taking up golf in this kind of pandemic. So yeah, not too bad on that front. And then obviously, this is the forecast, pre Topgolf acquisition, because obviously when we add the revenue on top of this, which Topgolf does, the growth jump will be absolutely huge. So yeah, from that point of view, before the Topgolf side of it, it was a company that was doing okay on the revenue and profit front, which is a bonus. The only little red flag I did have about this company was the balance sheet. So 103% debt to equity. The debt was 715 million and the cash was 286 million. So the cash to debt was probably something that I would not normally invest in. So that's the only little negative about it. But what it's done to take on the Topgolf acquisition is it is taking a little bit more debt on, but at the same time it has raised some cash. So that's not too bad. And I think the profit that Topgolf will create in 2022 and beyond will be able to pay this off. And I think when ELY or Callaway gets even more golf sales going forward, I think they'll slowly be able to pay this debt off. So I'm not too worried about it. I think when you consider like how good of an acquisition that is going to be for Callaway Golf, I'm not too worried on the debt side of it. But yeah, that's the only little negative I do have. It could be slightly a little bit better on the balance sheet. It's the only one negative that I do have with this company itself. So when we're looking at Callaway Golf third quarter earnings, these earnings were actually really good. The demand for a lot of golf clubs was actually fantastic, and this is kind of when as well they announced the Top Golf acquisition as well. So US retail sales of golf equipment were up 42% during Q3, the highest Q3 on record. US rounds played up 25% year over year in September, and now is showing growth full year despite shutdowns. Obviously that probably drop off a little bit with it, getting because of the weather and everything, but it's still great to know that there's a lot of demand there for golf. Number one brand in overall branding rating and leader in innovation and technology, so another positive right there. Receiving positive feedback on 2021 product range from key customers. And then you can see here also the brands on the right hand side that they also own, not just the Callaway brand, which is pretty good. There was also some things about the apparel and gear segment. So total revenue only down 3.4%, which is really good. Obviously, you think about the closures and everything, and obviously that's been helped with online sales and things like that. You see Travis Matthew and the Callaway branded business experienced significant year-over-year revenue growth. Jack Wolfskin, which I totally forgot that Callaway owned this brand, only down 16% year-over-year, with improving trends in October. And you can see here that how much that e-commerce sales did help the company with increased 101% year-over-year, which is pretty good as well. So yeah, I'm pretty happy on that front, what they're able to consider, what's going on in the world and still producing them sort of numbers. I think it's a pretty good thing from the company. And then we get onto the third quarter sales, and you can see here when you look at 2020 and 2019, and let's not forget about the pandemic, look at the net sales, really good year-over-year growth. So that's really positive. Gross profit as well, that's positive as well. Gross margin's gone down a little bit, but hey. And then as well as that, you've got the adjusted EBITDA. You can see here 87 million compared to 57 million. So that's pretty impressive on that point of view as well. And you can see here a little bit more of a breakdown. Golf equipment, 27% growth, and then the apparel side of it, down 3%. So yeah, still pretty good on that point front. So, like I say, as a company without the Top Golf acquisition, this company would be interested at the right valuation. It's not amazing, but I was like, yeah, it's still a solid company that's here, so that's a pretty good. But now let's get on to the exciting point. Probably the reason why I'm actually buying into this company is obviously going to be the Top Golf. So first of all, I was tracking Top Golf because I believe they were going to IPO. So they looked like they were going to IPO, and they're going to IPO about 4 billion. So I was like, that's not too bad of a valuation, but obviously the IPO never really went anywhere. And then I heard the news in October, and I probably should have been a bit quicker on this one, buying this one. So that's probably me being a bit slow, but it's still not too bad considering. But yeah, Callaway announced it were going to buy Top Golf for 2 billion. So I was like, straight off, I'm like, okay, we've gone from the company going to potentially IPO at 4 billion, now IPOing it or being acquired by Callaway, who did actually own a stake previously in Top Golf before fully purchasing the company. But I was like, so now we're going from a 4 billion IPO to actually getting acquired for 2 billion. And I thought this is a really, really good move. So first of all, the Top Golf, what they currently do. So Top Golf, even though you would think automatically golf, it's actually more than just golf. So it's a bit more as well of the experience side of it. And this also appeals to non-golfers. So a lot of non-golfers actually use Top Golf. So obviously the driving ranges look absolutely phenomenal. But as well as that, you can just meet there with some friends and go for a drink, for example. You maybe watch some of the sports there. They also do food, so you might get food there. They've also started to move into like business conferences and also having actual like events going on. So I think they were on about having like music events in Top Golf. This was something they were just starting on pre-COVID. They were just starting. So yeah, and obviously the company was doing decent revenue as well. So obviously Top Golf is, for Callaway, is expanding past the golfing side of it. Top Golf is actually quite a bit of a an experience play more than anything, because even though you will get a lot of golfers and you'll be having the driving range, and obviously that will probably help Callaway sales, you also got people that aren't top golfers that will be using it. And I can just see a lot of Top Golf places being very popular, like big sporting events and everything like that. So I like Topgolf more than Callaway. That's the big thing why I'm buying this. I'm a big fan of Topgolf. So yeah, and I think as more and more, obviously a lot of them are the US based, but as more and more come to the UK and other parts of the world, I think it will do really well for them. So first of all, let's talk about revenue side of it. So at the moment, in 2019, obviously they've not put 2020 numbers on because obviously COVID's hurt it and everything like that. But from what I've heard from the conference call, it sounds like Topgolf was still putting in very good numbers in COVID. I've heard that a lot of venues were above, like still 80% of 2019 numbers, some even exceeding 2019 numbers, which is fantastic. So there's still a lot of demand there. And also one key thing that I picked up in the conference call, which I listened to about the merger, is that people are actually spending even more at Topgolf, which is really interesting as well. But anyway, back onto the company side of it. So you can see here that the combined revenue will be around 2.7 billion, which is crazy because like when we go back to the market cap side of it, that's the revenue of basically like the what Callaway were doing weren't too bad, and then you add in this acquisition and you look at the market cap now and you look at the revenue, 2.7 billion in revenue, and then by 2020 this is going to put Callaway into a very big growth company here. And you can see here by 2022 we're talking 3.2 billion, which is really, really interesting. So that's why I think like the share price will probably shoot up quite a bit from here. You can see adjusted EBITDA will be around in 2019 would have been 270 million, and you can see here it will go to 360 million, and that's why I think mid to high teens. You can see that I think this is why they'll be able to control the debt, even though that's the big only like the one red flag that I do have. Yeah, that's the one thing that I've always said that I think will be the problem, but I think they'll be able to hopefully sort that out. And you see the Topgolf locations here. So 23 million venue visits in 2019, 58 US venues in 3 format sizes, and 5 international venues. So yeah, you can see the large venues are 100 bays, medium 700 to 100 bays, and small venues. So yeah, you can see here as well where they've expanded to United Kingdom, Australia, and 100% of US venues have fully reopened as of 7th of the 9th, and recently operating at 80 to 85% of 2019 same venue sales. So that's really good. And then this is what I mean earlier about you buying more than just the golf side of it. So you get the breakdown of the actual venues here. So you get the actual the gameplay side of it, which makes up a 34% of it, which isn't that much really. And you can see here food and beverages makes just nearly as equal up as it. You got the events. I talked about they were putting a lot more events on before COVID, and then others, which makes up 4%. So you can see here that this is pretty good how diverse the income is at these sort of venues. Kind of reminds me a bit of a Hollywood Bowl kind of thing. So yeah, that's definitely an interesting point of view here. And then this is a bit more of a breakdown into like the Topgolf financials. So we did the combined revenue, but this is actually when we look at the historic revenue of Topgolf. So you can see 2017, 630 million, 2018, 862 million. And then we can see here, this is when Topgolf made $1 billion for the first time in 2019. And then obviously if you add that into Callaway's current revenue as well, let's starts to get really interesting. So yeah, that'll be pretty interesting overall. Yeah, and you see 30% revenue growth for the last few years for Topgolf, which is is a growth company, and that's why I was really interested into buying into this one. And you can see here the adjusted EBITDA as well. You see the amount of profit that it's making as well, which is pretty good. And as it goes on, Topgolf will obviously buy more and more venues. So you see 10 targeted new US venues per year, starting in 2022. 30 currently under construction. So that's really good to see there. And yeah. International side, hardly started on the international side as well, so that's going to be a huge, obviously free in the UK already as well, identified opportunity for 250. So more of these start going on, and they start franchising a few of these out as well. It'll do really well on that side of front. So yeah, Topgolf is definitely the reason why I buy it, that massive growth side of it as well. Yeah, and definitely the diverse revenue it comes in. It's like the US version of Hollywood Bowl or Hollywood Golf, if we could call it that. So yeah, so overall the company itself, the golf side of it, really interested on Callaway Golf, but definitely the Topgolf side of it. This is for me something that's going to grow huge. Love the venues, love how diverse that revenue is, and yeah, as long as you can get your head around that balance sheet, because it will be a little bit ugly, probably one of the worst balance sheets that I will own. I look at the Top Golf side of it and I think this is going to be huge. When they start opening up more and more venues, it'll be absolutely amazing, and Callaway Golf share price hasn't factored in my opinion, this deal, and that's why I can see this being a $60 stock by the end of 2022. So yeah, I'm really happy to pick this one up. Hopefully it goes down a little bit so I can buy more and more of these shares, but thought I'd share that one with you that I have started buying into this one. There's a few other companies that I am considering as well, so I'll see where I get with them. But anyway, that's the video today, talk about Callaway Golf. Hope you enjoyed it. As always, smash the like button. If you are new, make sure you subscribe, and I'll see you in the next video.